Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today we're going to be talking about sole proprietors. How do sole proprietors pay quarterly taxes? Okay, so first of all, I want to make sure that you are not confusing paying quarterly estimates with filing quarterly employment taxes, okay? Because people hear I need to file quarterly, and there are two different things. So if you have estimated tax payments, then you pay quarterly estimated taxes. If you have employees, then you have employment taxes that you have to file quarterly, okay? Again, two separate things. So I want to talk about that a little bit so that, make sure you understand what it is that you're supposed to be doing. So as a sole proprietor, you, the owner, are not an employee. You do not go on payroll, none of that stuff, okay? You take what's called an owner's draw. You pay yourself on a set schedule, and that's it. You write a check or transfer money from your business account to your personal account. You do that on a set schedule. That's how you get paid. When you file your taxes at the end of the year, what is left over as profit, that is what you pay self-employment tax on. Now, that profit plus any other income in your home, all that's mixed in together, shake it all up. You have your tax credits and deductions and all of that. And then at the end, there's going to be either you owe or you're getting a refund. Now, when you get to the point where you owe $1,000 or more, you are going to have estimated tax payments. And what that means is that you're going to have to pay into the tax system on a quarterly basis. Now, remember, we have a pay-as-you-go system. So think back, some of my sole proprietors, you may still have your job or you may be working full-time in your business. But on your W-2, there are employment taxes that are withheld, okay? That's a pay-as-you-go system. So this is the paying as you go, the estimated taxes, so that you can pay into your, pay up against your tax liability. So at the end of the year, when you file, if you look at the bottom of your tax return, there is, like I said, if you owe, there's also a little number that will be to the left. If there's a number there, then you probably have an underpayment penalty. And what that means is that you have not paid enough taxes into the system before the deadline. And so then you have this underpayment penalty. So that is paying estimated taxes. Your estimated tax dates are generally the same dates every year. Q1 is due on April 15th. Q2 is due June 15th. Yes, 2 months later. I told y'all about these dates, right? Q3 is due September 15th, and then Q4 is due January 15th of the following year. And so once you pay those estimated tax payments, again, when you file, you give yourself credit because on your tax return, it asks you, did you make estimated tax payments, the dates and how much you put that on there so that you get credit for those. And then again, it gets washed out. And at the end of the year, you're either going to owe more or you're going to get a refund if you have overpaid. Now, listen, I keep telling you, as a business owner, you are going to get to the point where you're going to pay these estimated taxes. That's the cost of doing business and being profitable. Okay, it is what it is. Now, you may have some tax credits that offset that tax bill. That's great. If that happens, awesome. But at the same time, those tax credits may tend to be temporary, like your kids. As much as we love our kids, when those jokers age out, you feel it. Okay, so. But like I said, as a profitable business owner, you are going to have these estimated tax payments, and you're going to need to write these checks to the government. If, your state has, has a state income tax, then you're going to be writing checks to the state too. That's just the nature of the beast. Now, again, this is not to be confused with quarterly employment taxes. As a sole proprietor, you may have employees, and that's great. But again, you are not one of them. So you may have employees that you are withholding payroll taxes and you are having to, submit those taxes to the government, and you are going to file the quarterly employment taxes. You're also going to file the annual employment taxes separate from your income tax. Please understand that these are two totally different sets of taxes. And this is very confusing because, I have business owners that say, okay, well, I already, paid these taxes over here. Again, completely separate. So you have, as an employer with employees, if you have employees, you're going to have employment taxes that you withhold from your employees' paychecks and you pay to the government. You're going to have your own estimated tax payments that you have to pay to the government. Okay. And then there is your annual income tax. Yeah, I get it. It's confusing, but you have to know this stuff because as the business owner, you got to make sure this stuff is paid and paid accurately. Now, to pay your estimated tax payments, you can simply go to irs.gov/payments. And you want to make sure that you pay into the right year. Okay, so when it asks you what tax year, you want to definitely make sure that you select the right one. And so that's really it there. When you're paying your estimated tax payments, there is nothing to file. There's no form that you need to file. You may have a voucher that if you mail in your payment to the government, which you can absolutely do that. And a side note, if you mail in your estimated tax payment to the government, you want to definitely make sure that you mail it certified because that is the receive date. So if you don't mail that payment until the 15th, you definitely want to mail it certified so that it is showing received at the post office on the 15th of, whichever payment is due. Okay. So you may have the voucher that you mail in with that, but other than that, there is nothing to file. You simply pay. When you have employment taxes, then there are forms to file. Okay. So I really hope that this, I hope this is clarifies exactly what it is that you're supposed to do. Because, the other thing that people that have a difficult time understanding is that as a sole proprietor, you don't have business taxes in the way that you file a completely separate return for your business. You have an attached schedule to your personal return. So even though your sole proprietorship or your single member LLC, these are the same things when it comes to tax purposes, even though you have your tax ID number on your Schedule C, at the end of the day, it does wind up on your Social Security number. Like, people really believe that if you have the single member LLC, that there is nothing attached to your Social Security number. That is not true. Okay, it's going to wind up on your personal return. The only business structure that is completely separate, that is not a pass-through entity, is what we call it. That's a C corporation. A C corporation is not a pass-through entity. The S corp, the partnership, the multi-member LLC, the single member LLC, those are all pass-through entities. Those profits and losses end up on your personal return at some point. Okay. So to pay your estimated taxes, you simply go to irs.gov/payments to pay. Your dates to pay are April 15th, June 15th, September 15th, and January 15th of the following year. And yes, if you have a tax bill, your tax bill for your annual tax bill for the preceding year is due on April 15th, as well as your Q1 estimated tax payment for the coming year. Yes, they are due on the same day. This is why I advise my business owners to be ready to file your taxes in February, because if you have an annual tax liability that's due and you've got your Q1 estimated tax payment that's also going to be coming due, and you might need a little time to hustle up some cash to get it done. Okay, so do not wait until April to file your taxes when you are a business owner, because then you're pretty much behind the 8 ball. You are behind the 8 ball, and that's not the place where you want to be. Okay, so if you've kept up with your bookkeeping the way that you're supposed to, then you should be ready to file mid-February, because you're waiting for any other, documents to get, any W-2s, 1099s, whatever. You should have those things by the middle of February, unless something has gone horribly wrong. Okay. So that's it for today, folks. I really hope this clarifies the whole quarterly tax thing. If you have any questions, you are welcome to schedule a consult here to make sure that you're doing what you're supposed to do, because I get it. It can be confusing. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.